All right.
All right.
Thanks for watching, everybody. Thanks for joining. Today we're going to go over some longer term sort of scenarios, and kind of leave it at that because right now we're kind of at a pivotal point here, and we have a lot of earnings coming up. So go ahead and share. All right, so let's get started here with the Nasdaq. So the Nasdaq has been kind of getting its butt kicked here recently. I kind of drew some different I guess you call it like I drew some different lines and stuff to take note of here. So hopefully this can help. So basically, kind of what we're looking at here is once I clear out the big one. So you don't typically see an extension past this. Here, let me zoom in. This 1.236 line here for a C leg. So typically, when you see something like this for a normal correction, you typically get a stop right around here. That's kind of why I kind of thought we had a decent amount of support yesterday. But still, with earnings coming up in the Fed and everything, we didn't quite. I didn't really want to say like, oh, it's probably good time to start going long, because everybody's always kind of too early when when you do get a major correction and then you get trapped, and that's kind of the problem. So if you liquidate because you went in too early and you get losses, like that's kind of how these guys do it. So it always kind of goes a little bit lower than you think it's going to, but once it breaks like a critical low here, that's when I think it starts to the tune starts to change a little bit as to what type of correction we're looking at. And I know there is a lot of futures activity here, and I think we probably will get some sort of bounce. I think it's likely, but I think we're gonna see something a little bit deeper here. If you've seen this Cosby here, South Korea has been getting hammered. It's been quite the last couple of days for these guys here. They're down. What did I say today? About 44%. That's crazy. So the Nasdaq here, it really hasn't gone down all that much. I think we're looking at maybe 12%, but that's still we're not having a correction in a long time. The 12% correction is small potatoes as far as I'm concerned. You really want one of those like nice deep kind of pullbacks to really buy a good dip. Something like a 20%. So something like this, 18% down to the buy support kind of down here. That's kind of what I would think you would see. Once this thing is all kind of said and done. Now, it's not a guarantee, of course. Nothing is a guarantee in the market, especially when it's been such a raging bull market for forever. Makes a lot of fools out of people. But I do think here that we've kind of gone past like the wave 4 kind of scenario. So before I had been showing, and I think actually the S&P shows it better. Before, we were kind of talking about something like this, where you get this. I'll change the color. Where you get this extension up higher. I don't think it's necessarily invalidated yet for like the S&P, but I think for the Nasdaq, I don't know. I don't think this is realistic anymore. It's gotten down just a little bit too far. So the next line here of support is not just this extension level, but it's this line here is the 50% retracement for your entire peak to trough. And the next level down is the 0.618. And typically, sorry, it's actually not the 0.618, but it is support from the last couple of highs that we had. Or at least like, the bigger ones like back in October and, late January. So I kind of think here that what we might see is, the 200 daily moving average is just too close not to test it. I think, these guys are kind of gunning for it, but I think that the RSI has gotten a little, it's kind of, flirting around with this like oversold at the, well, not just the 2 hour, but at the daily, it's kind of, it's kind of getting back to that. It's kind of getting there. And typically when you see that, you always typically get some sort of bounce or, something like that. So I do expect there to be some sort of bounce that's potentially a small like wave 3 kind of bounce. And I'll show you what I mean by that. So I think probably what you'll see is something a little bit more along the lines of like a like a wave, like a giant kind of like wave 5 sort of correction. Now it's always a little bit difficult to figure out like how far it goes. I think you might see something maybe a little bit more reasonable like this for the this first kind of leg down. I don't think that this is like the last leg here of a wider correction. I think you might get some sort of bounce maybe in August or something, like a sustained kind of bounce. So what I mean by that is, like, if we do see something like this, you'll probably get something a little bit more extreme, and that'll probably give you your peak to trough, your 20%, or at least your 18 or whatever we came up with before. Yeah, so about 20%. Okay. And again, this is just an estimation, so don't tar and feather me here with if this is wrong. But at least my experience, I think this is probably one of the more likely scenarios. We've had this really frustrating stair step kind of correction, and you typically see these when you're at major tops. And the reason you typically see these is because you have a lot of distribution going on. Now, there's a lot of like the sentiment has kind of changed pretty quickly, and it typically does. That's reflected in the VIX. Don, you had mentioned that the VIX closed above 20 today, which typically means you could see some more violent action. I think they're probably going to try to keep it up as high as possible here before earnings, or sorry, to wait for all the earnings to kind of finish up. But that's really only like tomorrow. So I do think this is probably one of the more important weeks in the stock market, I'd say, of the year, other than like coming up seasonality or elections and stuff like that. So I guess the big question is kind of what does this really mean here, or like how can you kind of prepare for something like this? So I mean, obviously, I've been kind of warning everybody as this has been kind of creeping lower and lower that hey, take notice, this could happen. I think I sent something like this maybe last week about a potential breakdown. That was when we kept making lower lows here and lower highs. So I mean, you can just kind of tell in the price action. There's just not as much like strength as there was, like, definitely on the way up. Sellers were just non-existent, but now they're everywhere. So they're selling every rip, and and we definitely saw that today with with the Fed news. So that it just got bought up all morning after a brief sell-off in the morning, but then we ended up closing lower, which I mean, it wasn't that big of a surprise. I feel like I probably should have shared more charts today with everybody, but kind of looking at my chart, there was just a little bit of a gap there between from hitting this last piece, and I think it's easier to see with the S&P. Yeah, like we had pierced the or you guys probably know what the hell I'm talking about. We had pierced this 0.618 level, and typically when that happens and you get a bounce, it's usually a bounce you can short. And also, just because the Nasdaq had been showing the same sort of problems, there's been a trend line here. So it's been kind of following this sort of trend line. So just with I mean, I made a rookie move today. I bought some puts like down here, and it didn't work so well. So I had to kind of hedge it all the way up and stay focused on it. But I could kind of tell when it was getting close up here, there was starting to be some like put gamma, that was starting to hit the tape here. So I guess long story short is we got a lot of volume, but it was kind of like a fake out. So it's kind of like a liquidity grab. So to kind of finish up this sort of scenario here, if we do get some sort of bounce where, let's say, the bottom's in, I mean, sellers are going to want to test that again. I think that's reasonable. But let's kind of assume here that we've got well, how do I say this without boring you guys to death? When it comes to wave theory, this is probably not it for the wave three. If it is a wave three, and you can kind of see like the 200 daily moving average here in turquoise. That line is just above this 1.618, which is typically like your minimum wave three. With equities, they always typically extend by a little bit. So maybe it's you'll probably see some sort of effort to break below this 200. Probably, if you close a day under it, then that's real bad. But I guess as long as we're above the 200, it should be all right. But I just don't think that's going to happen here. I think there's going to be a little bit more of a sell-off, and I'll show you the stocks chart here in a second. But what this also would do, here this counts. What this also would do is, and you might just get like this actually might be a good kind of setup here. I'm sorry, let me get this out of here. Sorry, as I'm kind of looking at this and talking here, I'm kind of thinking this is probably what you'll see. So instead of like the 50 here, you'll probably just see a random in between fib level here, because that's if you break below this, then that's typically like a really bearish sign. And then you could see some selling really accelerate. But I kind of think what you'll see is like maybe a termination of this wave 3 here. You'll probably get like a wave 4 bounce, and I can measure that here for you. If it does happen like this, and then I think probably what you'll see is you will see a full, you'll see like a full termination of this entire like first leg of this wider correction. And I think probably where you'll see this is you'll have like a close one day below these below this major support level, and that is sort of like a I've seen this many times before. It's like a trap. It's like people will short at the bottom right here, and just because we've broken a support level or we've closed below it, but then all of a sudden the selling will turn off. They'll just turn off the algorithm or whatever, whoever's selling, and then they'll let the bulls buy it up for a big retrace, highly likely something like a 0.618 kind of retrace before they sell it down again. And just kind of doing this by hand. Let's see how close. Okay, yeah. So it's sort of like that. So this is sort of where you're the first leg's always the most difficult to figure out where it's gonna stop. So I guess take it with a grain of salt here, but I do think that you'll probably see some sort of continuation, because again, it always goes down a little bit further than you think. But I do think that we're probably in, if you look at just it's sort of like further confirmation, I guess. If you kind of look at this here, I think we're in a wave 3 already, and you might get a very small bounce here. But I think this is sort of like your back half of this, and yeah, so I would say just prepare. This is a significant possibility. I definitely wouldn't take any longs right now. I can't give any advice. You do what you want to do, but it certainly seems that the Kospi here is leading the way, and I think contagion is the right word. It could spread throughout the wider market, and you can get some real some good some good selling here. Now, we haven't had like a real like wave 3 kind of day where it's just constant selling, but the wave counts here do kind of align with being right in the middle of a wave 3 of 3, which is very powerful. So you don't really want to be going long there. You kind of want to wait. You want to wait for like a close. Okay, let's put it this way: like sort of the order of operations when you see something like this is you still want to wait because you're still pretty close to the top. But if you get a close below the 200, then it's definitely no longs, no longs at all. But I think as long as you're above this 200, you'll get some more bouncing. And I think that these guys are really going to try hard to bounce at least halfway tonight to kind of get back to where they're at. Because if you look at this in more of a lower time frame here, you can really see that there's a lot of buying this morning, and sorry, this early afternoon, and then it just got sold down. So there's a lot of trap longs up here. I think you're really going to get a lot of people trying to get back to where we had this point of control, and that's not unreasonable. That's like a normal retrace. It's really just baiting from the sellers. So I think the more and more you try to overthink something like a correction, usually the worse it goes. So, in my prior experience, I think it's just important to talk through what some of these different like levels mean and support and stuff like that. I'll probably get beat up for saying this, but I like corrections. I like corrections because I think they're easier to read than just infinite up. Because there's always something you can measure it against. So like if you have a first leg and it goes down and then you finally get some, just at least when you're using wave, like wave principles, corrections are usually easier. I mean, you'd probably get somebody to tell you that that's totally not true. But I think, at least for me, I think corrections are a little easier to call than nothing but constant up. All right, so I will show the bullish case. So there's a possibility here we could see like a like a further run to kind of recapture where things had been left off today, and that will be a very tough slog for the bulls to do, but it's possible. And you could see something like this. Let me see if I measured this correctly. Yeah, okay, so freehand, not so bad today. So I'll take all this off so you guys can see. But I'd say this is probably, let's say earnings are really good from the next guys to report here tomorrow, and you could see a continuation where the week finishes up in positive territory. Let me get the weekly up here. Sorry, like takes me forever to zoom in. Well, I don't know. That would be tough. Yeah, the weekly's probably going to close like crap. But yeah, we've had a lot of down days, and typically, I mean, we don't have like a buy count yet. But if we get another down day like tomorrow or the next day, then I could definitely see us getting some sort of buy signals. But it's, I always say this: it's things just longer term patterns always typically end up being symmetrical or at least close. And when you take a step back and you look at the daily and the weekly and stuff like that, it always, kind of jumps off the page at you. It's always when you're getting tripped up is when you're trading day after day after day, and you kind of fail to take a step back up and look. And that's kind of why I like doing the webinars, because it's like once a week I kind of force myself to dig a little deeper and put in a little more effort on like what the higher level indicators are, or not indicators, but the higher level charts are kind of looking at. All right, so that is I'd say the bullish case right now. That's probably your medium bullish case. There's another scenario here where this could be it for some sort of correction, and then you could have your full retracement here, and what that would look like. Actually, probably look more like that, because you've got this kind of goes right back up to the main point of the zone. But that would still require a lot of optimism to travel, 8-9% from the bottom here. There's just not a lot of good news. If oil keeps screaming up, the Fed's holding rates flat because they don't want to make anybody mad. Like they're just not doing their job with that. So, but anyways, this is still a very valid bullish scenario. And then, once that sort of correction would complete, it just kind of changes the wave counts, but you would still get something that ends up being reasonably symmetrical. I kind of think here where you got your buy volume shelf. So does that make sense? Is there any questions? Am I totally nuts?
No, that's fine. I mean, I have noticed that there's been like a bifurcated market with, the semis going down big, and the software stocks bouncing back up. So like, the IGV, which is the software index, has been actually looking pretty decent. And I have a couple. Microsoft's had their earnings; they were up 10% this evening. On the other hand, Meta is down 10%. So
right. It kind of balances itself
out.
As
far as the overall market's concerned, but there has been like a lot of these software stocks are really, they had a big crash while the semis were going way up, and now it's reversed. It's like
Right.
it's almost like a pair trade, that people were buying one and shorting the other, and now they gotta reverse their positions, and then it's flipped.
Yep. It's a sector rotation with style. Um, yeah, I think you're right on with that, especially when you look at something like the S&P and then you look at the Dow.
Mhm.
So, I mean, the Dow is still above 50,000. I mean, that's huge. And it's
I
like,
mean, it was down today pretty good, but
yeah. But I still think it's, if you
but
look at it in the grand scheme of things, it's
yeah,
still closed above its. Oh no, it did close below the 50. So that's still bearish. But um, I think the Nasdaq trade is probably playing out right now. Like I think you're right. Like semiconductors and stuff have been hit pretty hard, but it's still really not that bad when you look at the overall like total of
well, when
like
you look at
how far we've gone.
where they came from, yeah.
Yes,
I mean,
exactly. But you're right.
like
So
MU is still what is it, 730 or something?
yeah,
It was 100. It went up to
right.
1,200.
Exactly. Yeah. So like it is kind of relative. So when you're looking at stuff like yeah, and one of the reasons why I wanted to pull up the S&P chart here is because this still looks, it potentially bullish. I
Mhm.
don't believe it, but I'm still not. I wouldn't be doing a good job if I didn't call it out. Um, I still think it closed below the 0.786, kind of like we talked about right in the beginning of the call, which is we kind of saw the Nasdaq that it pierced that 0.618 level. Usually, if that happens, they're going lower because that's sort of like a test to buy support. So they really just were testing 7,300 and seeing if there's a lot of support there. I think the next level down here is probably this 0.886. And the reason I think this is because, again, higher level time frame, usually it's symmetrical. And the last point of contact that we had was up here at this 0.886. So usually what I see is if, let's say it only retraces, 0.786, then usually like wave four or whatever is going to be at the same sort of extension level. And that usually, that makes a pretty symmetrical triangle there. But sometimes, like it just breaks down and, they turn into like wedges. So, whatever. So if you're looking at like the NASDAQ, it could, this could be interpreted as the perma bulls would be like, it's a bull flag, like, well, I mean, it might be. I don't
If you
know.
look at
You could have a
uh,
Trump tweet and all of a sudden it gets, it explodes.
if you look at
Um,
the weekly,
yeah,
could come down to what, 26.2 on the Nasdaq and still be fine.
that's right. Yep. So right now, I mean, that's why the first leg down is always the most difficult to forecast. Um, so to kind of keep it, short here, I think because I covered a lot of the different scenarios, like with the Nasdaq and stuff like that. But with the S&P, I think you might just get a little bit more of a sell-off, but probably not much more unless there's real like fear and contagion. Like unless you get a really bad day, like a 2 or 3% down kind of day, and you close at the bottom. So like like a wave three kind of beat down. That hasn't really happened with the Nasdaq or with the S&P or the Dow. I mean, you're right. The
Well,
Dow was down today, but nothing
yeah,
crazy.
if we don't
Um,
get if we don't get a rebound Thursday or Friday, Monday could be very interesting.
exactly. Yep. Yep. And I also highly recommend looking for like traps. And what I mean by traps are
Yeah.
usually every day has some sort of theme. So today was the trap, a beautifully executed, bull trap today. But also, if we're looking at, like you're looking what the bulls are trying to do right now is they're trying to do the bear trap. So everybody, probably bought some puts thinking it's going to go down tomorrow, at close, that kind of thing. And then they'll wake up to, NASDAQ being up 1.5%. It happens probably once a week to me. Kidding, but no, the reality is this is like, the bulls are still fighting to keep the market at sky high levels. I think the sellers are not trying as hard as they could because they're still distributing. So I wouldn't put it past these guys to, let's say, it heads just a little bit lower. A lot of people short, the VIX is high, that kind of thing, and then they jam it up like this. and they do a big volatility crush, and market makers get rich, orchestrators get rich, that kind of stuff, and it's just another way to extract money out of retail. But still, it would be difficult to get that kind of momentum because there are a lot of shares. What is it, 3.8% short shares right now, and that was kind of common during right around like 1999, 2000, when all this stuff kind of went bust. But so I do see it in the price action. I see a lot of defense from sellers. Like if there's some buy spikes and stuff like that, they're usually contained at major levels. So for now, let's just say this let's just say that this line here, this pretty much like the 72.63 is, if it breaks below that and we make a new low, then odds are the Nasdaq has already gone way lower. So I mean, we'll have to see what happens. I think it's too early to call, but I just still wanted to flag the risk with the indexes. I think it's
another interesting tidbit is that there was this week a huge amount of treasury bill settlements.
Oh, okay.
Enormous, like over 100.
That's a lot.
Yeah, 120, I think it was, for the week, finishing up tomorrow. But Tuesday was like 80 alone.
Okay.
Yeah.
Nuts.
So that didn't help the liquidity issue either.
Right. No kidding.
Yeah.
So one thing, so just kind of taking a look, shifting gears here, kind of taking a look at the yield. So the yield went up today, of course, because the Fed's not hiking rates. They're not trying to put the brakes on the brakes on some stuff. And Worst did mention today, he was saying he's trying to separate the thinking as as like, well, all these companies spending billions in capex, paying each other for AI stuff. That's a separate kind of issue versus the wider economy. And I don't really know if I believe that. I kind of feel like spending anywhere is going to stimulate the economy. There's people that need to do like electrical work and stuff like that. So I think it's still prolonging the inevitable. But what I think is happening here is that the bond guys, they know the reality. The reality is that continued growth and kicking the can down the road still creates inflation no matter what. And even the companies that are spending all this money on each other stuff, it's at some point it's kind of funny money, especially when you factor in the depreciation risk. But that's I'm sure we'll read about that years later. And one of the many millions of books that will be written about this sort of bubble. But I think suffice to say that the rates are headed up because bond traders know it's inflationary. So if you don't raise interest rates and throttle the stuff back, it's I think they just have to wait and I think they're probably just waiting for the AI bubble to collapse here, so the spending collapses, so then they don't have to raise rates. They just get a recession by default, which I think is a little bit more risky than raising the rates, because then you're just letting like the normal market forces whipsaw everybody out of it, and kind of pop that balloon. But if the Fed does it, then they're responsible for causing it. And as a student of history, that's the Fed gets blamed for hiking rates in like 1929 and trying to put the brakes on the market. And they tried to do that before it went up another 30%. They tried to do that in March of 29 or something like that. And then anyways, they didn't do it, and they should have done it. You read the meeting minutes. It's kind of interesting. There's a lot of interesting parallels. Anyway, so the yields are going up. I think they're just going to continue to go up, especially if oil's going to go up. Gold, my little crayon line here was mostly correct, I guess. I do think we're starting to see very strong sort of consolidation pattern form here. There's a lot of selling, but I just think it's overdone. Where are you going to hide if when when everything kind of crashes? I don't want to say that. This is probably not the right word. But in my opinion, it's more like there's nothing else that is cheap right now other than like software stocks. But software stocks, like Don, like what you mentioned before, I mean, like software stocks. I don't think they're down and out for forever because of AI. I just think that you got to be very careful about like looking at revenue and making sure that these guys are actually making money versus assuming they're going to make money in the future. So when I'm looking at like when I'm trying to pick up stocks, I always look at the ones that have like low PEs, low beta, but also good cash flow. And that's just that's a whole nother topic. It's more that like fundamentals, looking at fundamentals before you're picking up stuff. And that's again why I like the food producers. I get made fun of for buying Campbell's soup a lot, but they pay a dividend, and they're well below their market value, with shares divided by outstanding book value divided by their outstanding shares. So the software companies, though, they don't have a lot of like assets. Like Campbell Soup, they could sell stuff. They could sell machines. If they get into trouble, like Carnival Cruise, they can sell a cruise ship. Intuit, what are they going to sell? The whole warehouse full of boxes they had for TurboTax they didn't sell last year. So I just. Anyways, so gold is consolidating here. I really think it's like a wave 4. I mean, if you do these, if you kind of follow the same sort of principles here, looks like you've got something kind of like this, where if you see like a new low like this 38.50, I think is reasonable. But this does look like a very, very large ABC. And if you guys like wave theory, then typically you'll know that that this could be just one gigantic bull flag for wave 5, and wave 5s can be extended with metals. But I think that if you have a lot of this junk going on here with U.S. bonds turning into junk or something like that, you might have a longer term sort of consolidation. Here, let me get this stuff out of the way. But you might have a longer term consolidation with this. But I think this is still a very bullish pattern. And all this, and you're starting to see some buying here, but you're also starting to see the selling kind of dry up a bit. Silver, I think, tells a very similar story, where depending on where where you want to draw your trend lines or whatever, I still think that this is a bullish sort of consolidation. Like the longer it stays at these levels, we've already got a weekly buy signal. The longer it stays at these levels, I think the longer you're going to have, the longer you're going to have more, like a bigger, bigger breakout, like a coiled snake kind of thing. Oil, it looks like a layup here. I mean, yeah, I haven't really been paying too much attention to it because I've just been assuming it's just going to continue to go up. Yeah, I guess if I was more actively trading it, because I mean, I have my longs and I'm sitting on them, but if I had been more actively trading this, it was a pretty clear indication that there was a top here, or at least pretty clear that I was getting a little extended. I do think here that you've got your pivot, you've got a decent amount of volume that kind of like marks that bottom there. And then I think $100 a barrel is probably coming, probably by fall. We'll see. But yeah, I mean, again, I don't like to overthink it with this sort of stuff. Like until I see some sort of official final resolution on this Iran stuff, like I just think it's going to continue to go up. Plus, also we have the supply. We got to replenish the supply, so that the demand's going to be a little bit higher than probably what we expect. Gas has just been weird. We had a contract roll. I got to adjust my charts here, but still, lower low. It's very, very odd how gas is behaving, but it's still consolidating, and it's still kind of drifting lower. But September's coming up, and we should see some sort of accumulation here coming soon. Bitcoin, this one I think is still probably not quite done with its little like pullback here. But if we do find some sort of support here, like I'll definitely add some of that BTCI, like high income Bitcoin fund. I don't want to like actually buy crypto. I just don't like buying computer code. But I will buy like an ETF or something that pays a healthy dividend, where I don't have to really worry about the volatility, especially if it's like designed like a covered call fund. Stocks, let's skip that one for now. I will come back to that and with that. Nvidia, I think, yeah, this, now that they got a new low, That's not happening anymore. So this is more of a well, that's not correct either. You'll probably see something maybe like this. After it's all said and done, just because it kind of rejected at this 50 here, and now it's just been kind of melting away. But yeah, I mean, if you see a larger sell off with the with the larger sell off with stocks, you're going to see Nvidia take a turn as well. Now, I thought it was interesting here. We had to close below the last low, so that technically means it's bearish. It's below its 200 daily moving average. So I guess watch out. Tesla, I was thinking about buying right around here, but it's still getting sold down. So I'm going to hold off on that. But I don't think it's going to be. I mean, can't go down for forever. I still think it's in a wider downtrend. But I still think.
I think the wiser move is to wait until you see an actual bottom form.
Yes. Yeah, I agree. That's yeah. So instead of trying to just trade it,
I mean, I already have it, so I'm not going to add to it until I actually.
Right. Right. So what's interesting for me here is it already kind of went past its wave 3 target. So I kind of expect it to, maybe bounce a little bit and then make a final low. But you're right. I would rather wait and see, if a bottom form. So right along 287 or something like that. And then you might get a real recovery. But yeah, I mean, this just looks like a very clear, almost the end of a wave 3. So just to kind of sketch it out, it kind of looks something like this. Where you get that real deep. Sorry, like that.
If it's going to 500, then whether you buy it at 310 or 330, it doesn't matter much.
Yeah, right, exactly. Okay, so let's finish up here with stocks. So this one was very interesting to me today. Okay, so I want to make sure I explain this. Before, I think my C leg here was down at 786, and I thought maybe it might extend a little bit, but we did break this. We did break this low here for Tuesday, May 19th, and what that technically means when you're, for just technical, analysis, is that's like your wave 4. So if you break this, you're no longer in an uptrend. So if some people were saying, okay, no, this is your wave 3, and now we're going up higher like this. The rules typically say you can't break below this line. So conveniently, sorry, I got kids screaming in the background. But I conveniently named this the oh shit line because it really is. Once you break it and close below it, it's probably not going to be that good for anybody here. So pardon my French. I just couldn't help myself. Sorry, that's my wife who's walked behind me for the last 45th time. She's gonna kill me if I don't show up to my Slack work tomorrow. You'll know why. She smothered me with a pillow. Anyways, so just to kind of show you guys a little bit more of the anatomy of this. There's kind of a bounce here on this line. This was what I was watching today because this is sort of like your high volume. Can you close that door? Sorry. Natives are getting restless here. Sorry about that, guys. All right, so I was watching this today as the Fed meeting was kind of unfolding here, and the drop here I thought was to me it's kind of like that capitulation, like wave 5 kind of drop, and I still think that this could just end up being one of those like the first, sorry, how do I explain this? I think this is it felt like a capitulation kind of move. I still think we will probably close a little bit lower soon, but the one thing I would watch out for is because this is or was the most bullish kind of sector, in the entire market here. Sometimes you breach these levels just to see what your buy support is. And if all of a sudden, if all of a sudden buyers just flood in, I mean, you guys know how easy it is and how quickly it can turn. All it takes is like 2 days, 2 days of 2% up days, and then everybody forgets that there was any issue whatsoever. But what I typically see is with a very bullish sort of sector, like a lot of people will pick up puts here and they'll get trapped because these guys will do this big buy up, and the sellers will just take the foot off the gas because they want higher prices to sell at, or they've already done the research, they've figured out how much it's going to cost to break through that level again, and then ultimately, when it comes time for the next cycle of when it comes time for the next cycle of the correction, so something like this, you get a much kind of deeper one here. I do see it happen right around, right around after like a big level support's been broken. So I just want to be clear, like if you're shorting, like still, take that loot and scoot, because you could get your face ripped off the next couple of days with a huge buy up, or you could have earnings or whatever tomorrow, that blow it out of the water, and like it gets a positive reaction. Even though earnings this cycle haven't been too kind, I still think that it's a possibility. So it's not all bad news for stocks. I think it's just we'll probably hit this 443 kind of thing, and then we'll probably retrace back up to like 560 or something like that. But it's still too early to tell. So long story short here is after looking at all these charts, I think that we're kind of it's still a very pivotal week for the market. Overall, yes, it is showing some I would say it's showing medium bearish, not like max bear, full portfolio, short, that kind of thing. I wouldn't do that. I don't know if that's advice. I don't think I could say that. But realistically here, like we talked about before, I think the probably the highest or the most likely scenario is we get a scare, but we don't get a bad scare. I think we get one of these things. We break this level of support to kind of indicate weakness, and then you see one of these, and then you get the big scare, and that's probably after the elections, where you get that bloodletting. So I'm looking for. I think that the easiest thing to look for is like an upward channel like this. So usually they have those, like a larger wave 2 kind of thing. But if you get up to this level, that's definitely a very, very shortable long-term kind of a drop. Of course, hedge above certain levels, but we'll cross that bridge when we come to it, if we come to it. But for now, futures are up 0.8%, and I don't think we'll have. I think the bulls are going to put up a fight here. So that's my official analysis here. I guess if there, I can take questions, but I'll probably stop the recording. Or if you guys have anything like relevant to the indexes or anything wider market that people might want to know, feel free to ask, girls. I can stop the recording. Okay. All right. Well, I will stop this. I gotta stop presenting first. I'll stop recording. Okay. Thanks for watching, everybody. And I don't think I ever say like and subscribe to my YouTube channel, and I'm still not going to say it. I don't want you to subscribe. I just wanted to say this. Don't subscribe to my channel. No.
I didn't know there was one.
There was. Yes, there is. Yeah, conveniently named Gains on YouTube. But anyways, yeah. So thanks for watching, everybody. I'm going to stop the recording.
Okay.